I want to make a video about Tether USDT, other stablecoins as well. So this is an important part of his trading strategy in cryptocurrency. Tether is essentially like USD. You know, it's a place where you can store your funds and you don't have to worry about the funds fluctuating. Tether used to be able to, and you still can now, they reopened account verification and direct redemption. 2017, if you wanted to put money into crypto, you could actually use tether.to, the website. You can still do that now. They just opened it back up so that you can redeem your Tether for USD. One of the problems with sending fiat from your bank account is it takes time. You know, so if there's a situation where you're looking for some oversold bounces, you're in a crunch and you want to buy real soon, it takes too long to move from your bank account into, you know, an exchange and then send it to Binance, etc. So, you know, I definitely recommend keeping 20% of your portfolio in a stablecoin. Tether is the one that I use. There's been a lot of FUD about this Tether in the past, and you just have to know it's the largest stablecoin there is. So I try not to get too caught up in that. So to give you an idea, these are all the exchanges that support, and there's probably more. You know, obviously Binance supports USDT, but there's a ton of people that support Tether. If you look at CoinMarketCap, you can see the volume for Tether. It's the number 8 cryptocurrency. Look at the trading volume. If we sort this by trading volume, it's the number 2 traded cryptocurrency, USDT. Now it's pegged to $1. It's supposed to be close to $1. So in essence, you can use it interchangeably as just like $1. Now here it's a little bit more than $1 right now, 101. What you'll notice is typically when the market is green, then Tether is red because people will move their money. There's almost $2.7 billion in Tether right now. So people will move, they'll sell their Tether and they'll buy cryptocurrencies. So when the market is green, Tether is red, generally speaking. So when the market is red, Tether is green because people take their money out of the cryptos and the altcoins and they put it into Tether. Now the price doesn't fluctuate much, maybe $1, 2 cents, $1, 1 cent. The problem with some of the smaller stable coins is that there's not a lot of volume. So like the last time that Bitcoin pumped, there's some stable coins that dropped in price, especially on smaller exchanges. Everybody sells, you know, there's still some fluctuation, not supposed to be much. It's still pegged to $1, these stable coins. But sometimes it happens and you can be in a bad position. So the safer play, in my opinion, is using USDT. And again, there's all kinds of FUD that's went on. Brief backstory is Tether used to use a bank in Europe. The bank in Europe was laundering a bunch of drug money for cartels in Colombia, South America, etc. Well, Tether got kind of tied up in that. So they have a really hard time working anything out with any banks. So, you know, Tether they've had to change banks quite a few times. You know, it's a common thing in crypto. You know, banks and crypto don't get along very well. So then there's FUD about, oh, well, these dollars all this Tether isn't really backed by dollars. So since then, you know, this is just the FUD that happens. You know, it's been going on since I can remember, since I first got in crypto. But at the end of the day, it works. I haven't ever had a problem with it. There's been times where you get a huge sell-off and everybody freaks out, and it did drop to 85 cents one time. But again, here we are again, pegged back to $1. So is there more risk than having it sit in your bank account? Potentially. If it's on an exchange, is it slightly more risk than having it in your bank account? Yes. Does it work? Do most people use it? Yes. So just keep this in mind. And it really is part of a bigger strategy. When we're trading cryptos, we have to avoid these losses. Like that's the key. A lot of people, let's say in the group, are real busy. They don't have time to trade. Let me give you an example real quick. So let's say you don't have time to trade. However, you did buy some ADA down here. You were accumulating ADA, okay? So ADA runs up, and I post a chart, which I did, and basically called the top that we're going to get a pullback. And so if you bought here, and then you converted your holdings into USDT here, or a stable coin, then the price fell $1,900, fell about $600, so fell about a little bit over 30%. So if you bought back here, for example, you could have made an extra 30% more ADA coins just because you tethered at the top and you bought back lower. And so that's where stablecoins are a game changer. Whichever one you're comfortable with, use that. It's not really, the idea of this video is not to debate which stablecoins are better, so I kind of have a few of some smaller stablecoins just to diversify a little bit. I'm mostly Tether right now just because I'm busy, and the market right now, I feel like there's potentially some downside risk. When I talk about taking profits, this is what I mean. Basically, your profits here, you sell and you go into USDT, and then if you decide to buy back into this coin or swing to another coin, that's what taking profits is all about. You're exiting, you got a good run up, you made a bunch of money here, and then you have to take your profits, because that's what this is. That's what the sell-off is other people taking profits. You have to take profits before they do. Now, if we go over to Binance, definitely recommend Binance. If you haven't signed up for Binance, please do. Most of the altcoins that we trade are on Binance. Now, the stablecoins, okay, there's a whole section. They've added a ton of them. And again, pick whichever one you feel comfortable with, whatever you want to do. You've got USDT. This is Tether. This is the largest one. This is USDC. Stable USD is USDS. Let's talk about Bitcoin USDT. This is Bitcoin Tether, right? So Bitcoin's down 2%. It's rebounded back up to 5,400. Now, the important part is this. If you're holding USDT and you want to buy Bitcoin with it, you use this trading pair. Okay? I definitely always go to advanced. If you would have tethered up here, if you would have sold all your Bitcoin and went into USDT, then you would have missed this downside action, price action. And so you essentially would be able to buy a few more percent Bitcoin by this. So that's kind of how we hedge our risks. And just keep in mind, when you're using Tether or any other stable coin, it doesn't have to be all or nothing. You don't have to tether your entire portfolio. It could be, I'm kind of uneasy about this situation, I'm going to put 20% into Tether. I really don't know. I'm going to put $2,000 in Tether. I'm just kind of like, again, you want to have some USDT or any other stable coin on the sidelines at all times. 20% I recommend, because you get these oversold bounces. Like you buy down here, it's an oversold bounce. If you got the RSI displayed, you get an oversold bounce. An oversold bounce, you're down here when the RSI is below, really around 20 is what I like to see. When it's close to 20, you're going to get a bounce, chances are, at some point. So if you just watch your RSI, you could play these oversold bounces, but you got to have Tether on the sidelines to do so. I mean, you could use another crypto, but if everything's dumping, you're losing valuation there. So it's important to remember, the great part about using these Tether trading pairs, Bitcoin USDT, if you got Bitcoin and you got your stop in place here, right, then you get stopped out, it converts to Tether. So the whole market's continuing to drop and it converts to Tether, versus, let's say you're in XRP BTC. The downside of using XRP BTC or XRP Ethereum trading pairs is if you have stop losses in place, you're going to go to another crypto. You go to Bitcoin and Bitcoin's still dropping, you're still losing valuation. It might not lose as much as XRP is, but you're still losing valuation. So a lot of these cryptos do not have stablecoin trading pairs, so it's definitely a lot cheaper too, because we're in USDT and you want to buy AST. Well, let's say there's not a stablecoin trading pair. So you have to buy Bitcoin with USDT and then buy AST with a Bitcoin. And so it's a two-step process each way. So you pay twice the amount of fees. I have a tendency, sometimes I'll trade USDT trading pairs just because it's more convenient. I'm trying not to get caught up in, if I can find good charts that are USDT, and I'll trade those. Sometimes if you're uneasy about what the market's going to do, that's a good reason to put some money in Tether. Tether it, stablecoin, whatever you want to do. Put into a stablecoin, you can sleep good at night. You don't have to worry about, Bitcoin, crypto, everything dumping. So it kind of gives you some peace of mind. But there's a lot of regulation in cryptocurrency, banking, the United States especially, tax stuff, when you try to go to fiat to crypto. So kind of the workaround that's used for most of these exchanges is these USDT and other stablecoin trading pairs. So I want to get this video out to you guys. I appreciate everything. None of this would be possible without you. Thanks so much. I'll talk to you soon.